bag. Do you all see this list in front of us?
Yes.
Oh my goodness. You getting ready to say something, Sandra?
Yeah, I just wanted to say that this week I didn't get greedy on the premiums I was trying to take in. I did 30, 45, and I closed the trade.
Yeah.
So everyone knows that this SPX can go crazy.
Yeah.
And so I took it in and I would close the trade out.
Mm-hmm.
Didn't
What
get
Sandra was
greedy.
saying was, go ahead.
Go ahead. Didn't get greedy with it.
Yeah, I said what Sandra was saying was that she didn't get greedy. She had a $35 or $40 price target. And when she got her $35 or $40, she closed it off. And then she didn't, she went with that to make sure she made her money, right? That's the way we do. That's the way we do. Good job. Good job. Good job.
Hey, look, Arlissa, I didn't mean to cut you off.
No, you're good. Hey, Miss
Yeah,
Barbara.
I had to step away for a minute. Great morning, everyone. I just wanted to say I did do the PDT hack on Monday and Tuesday, but I was more or less kind of looking for the indicators from the breakout strategy.
Okay.
And to me, after Tuesday, there wasn't a clear breakout, because if she's going from the wick to the body, I was just like, if I'm going to utilize this to be more comfortable, I'm like, let me pay attention to that. So yeah, so I only traded those 2 days, and the PDT hack worked out well.
I agree. So like she's saying, Wednesday and Thursday with the CPI and PPI day, the breakout was not very clear. And if it did pop up, I think the breakout on one of those days showed up later in the day, like 11:30 or 12 o'clock. It did seem to go on up past it, but that means you would have had to, watch, or maybe put an alert on that lets you know it's breaking out of it. But you're right. And if you're following that strategy and you don't see a clear entry, we don't force trades, right? You just go with if that's what the strategy that you're using. If you don't get the criteria for that strategy, then you don't use it. That's how that goes, right? Very good, Miss Barbara. Miss Barbara made her some money on Monday and Tuesday. Yes, sir. Yes, sir. Yes, sir. Wonderful. This is all wonderful. This is all wonderful. So I was asking, did we see the whole list of the tools in the E2T bag? These are the tools that we have in our tool bag, right? And we're going to go through each of these. I've got a screen or a slide for each of these, but this is the list. Oh my goodness. Selling covered calls, put credit spreads, call credit spreads, iron condor, which is combining these two, SPX and XSP daily strategy, the PDT hack, which kind of works along with those two. Breakout, if you're doing longs, if you're just buying calls and puts, or if you're breaking out with spreads. Shorting, we don't use shorting a lot. We did a coaching call, I think a month ago, but I never could get into the rhythm of shorting. And we did a little challenge. I don't think our challenge ever really kicked off too good. I think the biggest thing for me with shorting is I've not been able to find a very clear indicator as to what to use for short, like which stocks to go and do. And I don't chart anything else closely enough to do shorting on a particular one. So I'll pick, like my mind will hit like, oh, you could do shorting, but it hits me at the last minute. And usually if I'm not prepared, I feel like I just shouldn't do things willy-nilly anymore. I've done that in the past. I shouldn't willy-nilly need too many more trades. It doesn't always work out well for me. And then we've got straddles for volatile days, and we've got 4 advanced strategies that I'm going to share with you. That gives us 15 strategies, right? 15 different strategies. There's actually one more down here. 15 strategies we can use if we so choose. If I get to a screen and you need like more clarification or you want more information, please, put a little note in the chat or something like that so I'll know that you're asking for more information. Okay. Let's start with cash and cure puts. We're selling puts. What is it? It's selling puts to collect premiums or shares. You can sell puts if you want to just do it for money, or you want to do it to get shares at a cheaper price. You want to use this when you believe price is going to go up or at least stay above your strike. I've used it, and I didn't want to put like stocks on here that I've used it on. I figured I would just speak that instead of put it on the slide. But I've used puts on a weekly basis on AMC and EOSE, I believe, were the ones. Now, of course, when you're selling puts, if the price of that is going to be the price of whatever strike you're using times 100. I was doing them on Mara as well, but Mara has continued to rise and rise. So Mara, I think, is like $17 right now. And for me to, and I was kind of doing but back when it was down in the 10, 11, I was doing a 9 strike and a 10 strike, 11 strike. Well, that's $1,100. I think I went up to 12 one week, but now it's $17. That would be a $1,700 to sell puts on them. And that's not where I want to put that kind of money on puts. So I had to put Mara to the side and I've just done it on AMC and EOSC. So the cost is the price of the strike times 100, right? And the time required, cash secure puts take very minimal watching. And they take minimal watching because you pick a strike that you don't believe it's coming to, and or you're okay with acquiring the shares. So for AMC, I tend to use a 4 strike. And if AMC likes it around the $4, or it doesn't go any lower than the $4, it hasn't up to this point. And I feel like if I end up getting shares at $4, then I'll just cover call them, because $4 is a good place. So I just do puts at the $4 range. And if it were to get assigned, I just would, cover call them. But they require a little watching. You set it up where if it works out great, fine. If it don't, then, you end up with 100 shares. That's how that works. Okay. Strategy number 2, doing covered calls. This is where you sell calls against 100 shares or a long call. We did it with long calls before when we were doing like leaps. And that particular time, almost all the leaps we had went down. So that didn't work out as well. But if any long call, your long call can be a week, it can be 2 weeks, can be a month long call. Not a lot of us have calls really, but not for any length of time, I don't think. But if you do, you can sell covered calls against them if it's not doing what you want it to do, or while you wait, or you can buy 100 shares or have 100 shares and sell calls against those 100 shares. This works real good with the wheel strategy. If I end up with the AMC, which I did end up with 100 shares of AMC a couple weeks ago, and I've just been doing covered calls on it since then. When do we use this? When you believe stock price is going to go up, but it will stay below your strike, or you don't care about having your stocks called away. You put it at a place where you don't care if the 100 shares get called away, as long as you're going to end up with a profit. And again, the cost of this is whatever the price of the 100 shares was, or the price of the long call, if you do it that way. This requires minimal watching. You can do cash secure puts and covered calls in a cash account. You can do cash secure puts and covered calls in your cash account. You have to have the shares if you're doing covered calls. You can't do the long call and the cover in a cash account. But if you have 100 shares in that account and you do covered calls, you can in a cash account. So that allows you, maybe some people may be wanting to, utilize their cash account and their margin account. You can do covered calls and keep these, with maybe a way to keep it separate so that you're not having to look at your margin account all the time for the things that are just kind of running with time. Just a thought. It requires minimal watching, because if it breaches, then you just, you're going to let your shares go away and you're going to get a profit anyway, because you're picking a strike above what you paid for them. So if you paid $4 for AMC stocks, you're going to do a covered call at $4.50 or above, right? You're going to do a covered call at a strike higher than what you paid. That way, when they get, or if they get called away, you don't care, because you're pulling in the profit from the difference in the stock price anyway. All right. If you paid $400 for them and you sell them for $4.50, then you've made $50 plus the premiums you took in for the covered call. That's why they don't require much watching. If the strike gets breached, no big deal. You're okay with them being called away. Strategy number 3, put credit spreads. This is one of our bread and butters. We use put credit spreads and call credit spreads for our SPX stuff every single day. XSP, SPX. I do credit spreads on the weekly iron condors, I think we're calling them, or weekly high IV, we named them. That's what we're doing there. So what is it? You're selling spreads. You use these when you believe the stock price will stay above your strike. The cost is the price of the spread times, the cost is the price of the spread. So if you got a 1 spread, it's $100. All right, so the cost of the spread times 100 minus the premiums you take in. time required, this requires, in my mind, median watching. And the reason I say medium or median watching is that if the stock price gets into your strikes, you're going to need to either watch it for a stop loss or watch it to turn it off. Because with put credit spreads, if it breaches completely, then you've lost the money. There's nothing to get in return for a put credit spread going bad. When you're selling puts, if it goes bad, you end up with shares. If you're selling a covered call and it goes bad, you just release your shares for a profit. But if you've got put credit spreads and they go bad or don't go the way you want, then you're going to lose the money. So you need to do a little bit more watching with these. There's really not a lot of management per se, but if you see that your strike is getting breached, you may have to close it with a stop loss, or definitely watch it a little bit closer to see what you want to do coming up on expiration. Okay, that's put credit spreads. The next one, opposite of that, which is called credit spreads, same thing. When you believe the stock price is going to stay below your strike, they require a medium amount of watching too. The price of them is the spread times 100. Weekly, daily, we do these. We like call credit spreads, and I like them because they don't require as much collateral or as much money as selling puts does, or selling covered calls. Because if you sell covered calls, you got to buy the 100 shares or have the 100 shares. But with call credit spreads and put credit spreads, you only need to have the cost of the spread. So if you got $100 or $50, you can trade call credit spreads and put credit spreads all day, every day. If you got $50, $100, you can trade XSP every single day with that same $100. Iron condors is basically when we combine the put credit spreads and the call credit spreads together. We use these when we believe the stock price is going to stay between the two strikes. I've used these iron condors. I do it on our XSP every day. Many of us do it on SPX. I've done these with some of the ones that I do, those weekly spreads. I do them in iron condors. I found that some of them, I just rather go one way because like Palantir has been going up pretty steady, right? Carvana has been kind of climbing pretty steady. And if I put both sides on one side, if one side gets breached, you're like, that defeated, yeah, I didn't want that. You want to take in double the premium, but not lose double the premium because you took in both sides. So some of them I've just looked at, just staying, this past week, I stayed just on the put side on all of the ones I was doing. I had Mara, Carvana, AMC, Beyond. I stayed just on the put credit spread side because, like Mara's climbed all week with that whole XRP and the Bitcoin thing. Mara kept going up. So if I had the call credit spread side, I would have been breached on that side. So sometimes you just do one side, not them both. But if a stock is staying in the middle, then you can get money on both sides, right? Cost of that is going to be the price of the spread times the 100. These require moderate watching as well because it can be going one way, but if you've got strikes on both sides, you got to hope that you need to plan for it to, stay between those two stocks. You want to use this one on stocks that are staying in between two places, closer to expiration, maybe, using your charting, all those good things. Any questions so far? Anybody got questions so far? Y'all ready for me to get to the good stuff? Keep going and get to the good part. Ready to get to the strategies. Now I put the fan on me and it's got me sneezing. Okay. SPX and XSP daily spreads. This is our bread and butter right here, baby. Selling put credit spreads or call credit spreads together, or sometimes you just do one side, right? Sometimes you do them both. Sometimes you do just one side. You use these when you want to make a daily income. Who doesn't want daily income? We want daily income, right? SPX and XSP for daily spreads. This is the cost of these is same thing. The one spread times 100, 5 spread times 500. This is for XSP is 1 spread and SPX is a 5 spread. These require much watching. Anybody concur? If you concur, say here. I concur. Say here, here. These require much more watching. The way you get around the much watching is that PDT hack, which I think is on the next screen. But if you're just going to put the credit spread or the call credit spread on without locking in with the PDT hack, then you're going to need to be paying attention. Saida says, yes, indeed. You're going to need to be paying attention because SPX will be going in one direction and you think you can go off and, you know, get a Starbucks and you come back and your junk has turned and you're like, no, I was just trying to get a coffee. Then you want to throw the coffee in the garbage because I don't even want this no more. Do I sound like I know what I'm talking about? I ain't even hungry. I could start off being famished and be like, I'm going to get me something to eat. Trade go wrong. You're like, I ain't even hungry. It's not even, I'm not hungry anymore. It's like, I ain't even hungry. I'm telling you what I know. Telling you what I know. Been there, done that. Yes, Earl said, this is true. This is how I go. You're like, I ain't even hungry no more. Whole day passed. You ain't ate a thing. And you're like, the whole day's over. I haven't eaten a thing. And then you're like, I was too busy worried about this trade. Ain't even hungry. Ain't took a lunch break. Ain't had a drop of water. You just like, I cannot do any of this. Mind is shot. You need that mind blown emoji. Like, what are you doing? Oh my goodness. Whew. That's the truth now. It's the truth. Believe it. The devil is not a lie. In this case, he's a lie the other time. But in this case, whew, it's not a lie. So PDT hack. This is how we save ourselves on those SPX trades. And I don't think it'll work as well on the XSP because you don't have enough juice to work with on the PDT hack for the XSP. There's not enough room for the fees that you're going to pay to be worth it. But on SPX, it will work for you. What is it? Selling credit spread, then selling the opposite spread. So maybe if you did a call credit spread, you would then do a put credit spread, or the other way around, put credit spread, then call credit spread. The opposite spread to lock in profits or reduce losses. So you're going to lock in your profits here or lock in reduced losses. Okay. When do we use this? We use this again. We want to make daily income. The cost of this is the cost of the spreads. And you're using one set of collateral because you're doing two that are right here together. When you shift it a bit, it does shift things a bit, but one set of collateral should be here, should be used. And I'm thinking about whether it's one set of collateral or two. I believe it's one. The time required, you need to watch this closely initially because you need to wait till the other side feels. You want the other side of your trade to feel before you step away. It frees up the remainder of the day after both spreads feel. Once your call credit spread and your put credit spread are filled, then you're free to just go and roam about the cabin because you've locked in your money, whether it's one way or the other, and you're not going to touch those trades for the rest of the day anyway. If you decide you want to do other stuff later or do other things, then fine, but don't touch those two trades. Those two are fine to just go on about their day, right? If you want to check out the PDT hack, it's a part of the SPX playbook. You can also get it separate if you want at my website. Breakout longs or spreads. This is what Ms. Barbara was mentioning a little bit earlier, is following and using the breakout strategy, right? Following the breakout strategy of Axe options. I don't think she's the only person who does that breakout strategy, but that's who we've watched. So she does a strategy where she watched the breakout for the first 15-minute candle, one way or the other, and she trades whichever direction. She initially was doing calls and puts, where she was doing long calls and puts. Then she shifted over somewhere along the way, shifted over to selling spreads for her breakout. And now she opens and closes because her account is bigger than 25,000. So she opens and closes it the same day. What we've done is, hey, Jamie, what we've done is doing the breakout and then doing the PDT hack. So if you're gonna use spreads, then you want to use spreads and the PDT hack, unless your account is bigger than 25K, or you live in a country where you're not subject to the PDT rules. Like Aminata lives in Canada, they don't have PDT rules. The pattern day trader, they don't have those. So she can open and close hers. But if you're with us and if your account's over 25K, no issues. If it's not, then you got to use the PDT hack. All righty. Basically, you use this when you see a single direction movement. The cost of this trade is the price of the spread or the price of the calls and puts. I think Rasta had been working on trying to do the calls and puts on XSP for the breakout, and I think he's still finding his way. It seems like sometimes it goes well for him and sometimes it doesn't. So, and that's the drawback to buying. I've been a buyer of options in this lifetime, and sometimes you said lost my way. Yeah, so definitely I've been a buyer, and it one day it's like feast or famine. Literally, one day you're fine and you get, not that you get cocky, because you don't, but you get a little more confident, and then the next day it all goes into the toilet. I almost said something else. It all goes into the toilet and you're like, I did good yesterday. So Stephon says Theta eats his lunch. Yeah, that's the thing. If you're doing daily calls and puts, then it has to pop in the morning, because if it drags itself through, by the afternoon, Theta starts eating on your money. So even if it's going in your direction, you're fighting too many, you're fighting demons on every side. You're fighting demons on all the sides, and then you end up with your money being gone, even if it, did go to where you wanted it to go. So if you're going to do calls and puts, definitely practice that for a good little while in your sim, like while in your sim, not just on demand, but in sim. So that way you can really get a feel on what's happening there with the money, with the Theta and all that. But if you do it with spreads, then you're a little better shape. Time required, these are intended to be quick pop trades, so that you exit with the small profit or use the PDT hack to lock in your profits quickly. Right. So if you're doing it with calls and puts, it has to pop for you, and you got to get on out with your $10 or $15, whatever it happens to be. Maybe that's a thing, Rasta, that when it makes a pop, even if it's $10 or $15, you might have to grab your profits right off the bat. If it's $2 or $3, you just take that $2 or $3.
Yep.
Right.
You see $7, grab it.
Yeah. If you can grab it, you can go ahead and get your profits real quick. If you're gonna do calls and puts, which is the place you would do that in your cash account, you want to do that in your cash account if you're doing the calls and puts. You can't do spreads in your cash account, so no luck there. Shorting shares, so we didn't really get too big. We did a whole training on it. Price is going down. We did a whole training on it, but we didn't. I wasn't ever able. Maybe somebody else is on who did some who was able to do some shorting, and you can share some pieces. I really would like to be able to find some type of screener that gives, maybe you can go to the ones that are like all-time high screener. That might be one that would work, but I never did really get a good screener that would help me see which stocks to short when, Anybody got any comments on the shorting? I think we'd be watching all of our other stuff. Yeah. Okay, so shorting is when you are borrowing shares from the broker. You use this when you believe price is going down. And the good thing is it is dollar for dollar, so it's got benefits to it. You just got to be able to find what you're looking for and borrow them, go from there. The cost, the broker is going to block your buying power in the amount, the price times the number of shares that you borrowed. The time required, there's no expiration on shorting. It's easier to do stop losses when it's going in the wrong direction. So if you're going to short, for those of us who came from, trade and travel, you can do that whole 20% stop loss going down. So if it's in the sell zone, and it's going down, you could utilize those things. If you've got some stock that you're watching, that you're real sure it's coming back out of that, it's easier too to put on orders, like you can put in a borrow order maybe when it's coming downwards. But again, you need to be watching the stop and trade and charting it enough to know when it's coming out of that sell zone. Straddles. We use straddles, which is buying calls and puts at the same time. We use these on high volatility days. When the FOMC is gonna make an announcement, you can use these going into earnings potentially. High volatility days, maybe some CPI and PPI. I don't think this last two CPI, PPI really had much of a pop, but something you need a high volatility day for those. I would say for the most part, straddles could be for earnings. If you're trading earnings, which we kind of don't do yet because we haven't seemed to get us a really good strategy for earnings. And because the credit spread one worked but didn't work. It worked if you pick the right side, but picking the right side, no, because the whole thing is you want both ways. So straddles and strangles would work on earnings, and I haven't really finalized what I think is a good earnings strategy, but we are going back into earnings season. I'm going to post here in a minute the earnings, chart or graphic that we get from EPS Whispers, and it's a lot happening this week. The cost of these can be expensive depending on the stock that you're going to use, the time required. You must watch them and have a price target and a stop loss in mind before entering. If you're going to pay $400 or $500 for a set of straddles or a set of call and a put, you kind of want to have, you need to have an idea for a stop loss, an idea for, profit taking and stop losses. This is what's coming up in earnings this week. That's why I said this week got a lot happening. This is earnings. We have the banks in the first part, still got some banks up in here, interactive brokers, more banking people here. Then we come into some tech stuff. Tesla's coming, Netflix, Alcoa, credit cards are coming in, healthcare, Taiwan Semiconductors, the airlines, the homes, DR Horton, CSX, which probably is more like infrastructure type stuff. My nose is itching, like I need to sneeze. American Express, Huntington. Anyway, you see there's a lot happening here. Comerica, KeyBank, a lot going on this coming week. Looks like a lot of banking and money stuff this week. Auto Nation. That's what's happening this week. So, I mean, these are the times where maybe we can find some stuff this week in the mornings and or afternoons, and we can say, let's find us a straddle on one stock we happen to like or something like that. And we all do it in our sim or something like that. That way we can maybe get into some type of rhythm. I feel like there's opportunity with earnings because they happen 4 times a year. But even though there's opportunity, we need to have a strategy that is going to be kind of straightforward and repeatable. And I don't know if we have, I do know we don't have that yet. Something that's repeatable. Any questions? Because I'm getting ready to get into our advanced strategies. Jamie can roll his R's. I can't roll my R's. Strategy. See, my tongue won't do right. So Jamie can just say strategy. Jamie, say it. You all are quiet on there. You can say strategy. Say advanced strategy. You roll your R's much better than me. Huh?
Strategies.
Yeah, I cannot. I cannot do it. Never could roll R's. For me, it's just strategy. But that sounds like I'm from Russia. That don't even sound like Spanish. It sounds like another language. One of the jokes that we have is that my son and I, we always say we're Latin when my daughter's around because I speak Spanish, and I'll say, yep, we're Latin, and she's like, and you're not. You sound like an American person trying to speak Spanish. Got the Southern accent talking about your Latin, like, and no. And no, I'm trying to get my Thinkorswim open. Okay, here we go. Miss Geraldine, we crazy up in here. So advanced strategy number 1, I took pictures off of all of these from Robinhood. And the reason I did them in Robinhood and took pictures is because I could see this little graphic right here. And I think if we're in Thinkorswim, that you can also do maybe analyze. I'm not sure if analyze gives you the picture like this though. I don't think it does the picture in Thinkorswim. Does somebody know in Thinkorswim where you can put in stuff and see what it would actually be doing? I don't know, which is why I did it on Robinhood, but I know everybody here doesn't have Robinhood.
I mean, isn't that what analyze is?
Does it give you a picture?
No, I don't think it gives you. I don't know if I'll consider that a picture. Nah, it's not gonna be as clear as the other ones.
Uh-huh. See how this does? It gives you a nice little picture of what,
Yeah.
you know what I mean? This tells you exactly what's happening here.
Nah, you ain't gonna get that. I don't see that in Thinkorswim.
Right. I'm thinking, I don't know if Miss Sylvia said the web version. Okay. And I very rarely use the web version because it just seemed like too much to do on Thinkorswim. Okay, so this strategy, number one, is when your stock is bearish, but it might go up. So it's pretty much going down, but it just might decide to make a pop, right? It's already bearish, but it might go up. So what you do here, got some steps. You're going to choose 1 to 2 weeks expiration. Let me get my pencil running. There we go. You're going to choose 1 to 2 weeks expiration. You're going to buy 2 at the money put options. And you're going to sell 1 put option at a higher strike for more than what you paid for the put option. So you're selling a put and taking in more money than you paid for the other 2 that you bought. All right. I use SoFi as an example. If you look over here to the side, I'm not sure if that's big enough for everybody to see. I can try to make it bigger and see if we can nope, it doesn't seem to like to get bigger. It's going to see if I can make this bigger. This says, I wrote it down here though. I bought 2 put options at $9. They cost it actually says $26 up there. They cost $26 each, which would have been $52 is what was paid, $52. And then I sold the 1 put option at the 9.5 strike, which is higher. And I sold it for $58. And the difference between those 2 is this $6. So you got a $6 credit by doing this. Okay, $6 credit. What I see here though, let's look at what it needs to do before you look at your profits and all the suchy. So these are the break-even prices. This break-even here, the 943 is that price right there. And 857 is that price right there. So this is 857 and this is 943. So the price has to either be below 857. This green is where you're going to make money. So it needs to go below the 857 or it needs to go above 943. Okay, this is the 857. That's the 943. That's to go below 857 or above 943. Everything in the middle here is where you're not making, you're losing money in here. Your max loss is $43. You can see down here, max loss is $43, but max profit is $857. Max loss is $43. I'm trying to erase some stuff so you can see what's happening down here in these corners. I know this is small. We can definitely go back and grab the recording. Max loss is $43. Max profit, $857. $857. And you took in money to start the trade.
I mean, I don't hear nobody shouting. I don't understand. I don't understand why I don't hear nobody shouting now.
Cue the shout music. Dun, dun,
Well,
dun,
come on now.
dun.
Lost the profit? Come on now. Somebody needs to give some praise up somewhere. Man.
Somebody give the praise up, especially because you only, $43 is what you're putting on the line, which I don't personally see at this point how these numbers are calculated, but I put this into Robinhood, and this is what it came out with, right? This is a three-legged strategy. So if you're in Thinkorswim, you will have to pay for all three legs. So, each options contract is 65 cents. So you'd have to pay 65 cents times three is what, $1.80, $1.90, $1.95 you're going to pay. So about $2 in fees on Thinkorswim. But this is what's happening here. And I think this may be called a back ratio. I think if you put it in, and maybe we'll go look at that. I think when you put it into Thinkorswim, I believe it's called a back ratio. And this is what needs to happen.
Back spread ratio.
Back spread ratio. Okay, I knew it was something like that. But this is what the price needs to go below 857 or above 943 in order for this strategy to pay money.
And so what happens if it ends up in between?
Then you lose your $43.
Oh.
I mean, your max loss is $43 or some form, because $43 is probably right here at the tip. That's probably where the $43 is. So higher than that place would be less than $43 loss, and lower than that would be less than 43 loss. But the tip here is where you would have max loss would be down here.
So listen, I think somebody was talking to me. What kind of trade is this?
This is an advanced strategy, and it's it actually turns out to be a credit. You take in money, but because you bought two, this is why you can have that extra money on the back side, on the bottom side, because you bought two puts. So you really have like 1 and 1 would be your credit spread, and then you have one extra on the bought side. That's how you can get up with more money down here. It's called a back ratio.
Okay, thank you.
So what y'all do? This, of course, will be it's going to be recorded. If you don't grab it right now while I'm talking about it, if it doesn't sit into your head, then basically you can go back and watch the video and watch it a few times. Push your own buttons on your own platform, and then see what it looks like for you. Okay, so go ahead and grab the recording and practice it. We got today and tomorrow. If you want to try some of these things, maybe you try them in your sim or something like that. Go with 1 week, maybe. That way you don't have to watch it as long. See how it plays out for you. All righty. That's my thought anyway. That's what I'm gonna do. So yeah, that's what I'm gonna do. Now I'm going to do. That's what I'm gonna do.
Can I interject something?
Yes, interject.
I just want to point out two things. Number one, well, the main thing is keep in mind that what makes this situation work obviously is getting the direction right. So obviously in this situation, you're not trying to be in a situation where you're doing calls, right? Because this is a bearish strategy. So it's important to realize that this is a bearish strategy, not a bullish strategy. So direction is important. But the second thing that's, to me, just is like great, I would say what makes this great, in my opinion, is the distance between those two break evens is only 86 cents. So you looking at it like, in order for you to, let's say, lose the $43, and again, I'm not saying that it's impossible, obviously it's not, but I'm saying in order for you to lose the $43, like it has to almost be dead center and land like directly on the break even right there.
Yeah. In
order for you to lose the whole 43. And obviously, with the way things fluctuate, volatility, blah, 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 blah. That is an awfully narrow range for it to have to land on, specifically to lose a whole lot of money. So, I mean, just be aware of what your break evens are in these situations, so you'll have good understanding of like why you don't have to necessarily have to panic.
Yeah.
Like I typically would probably.
Yeah. It looks like the max loss would occur at 906, which is exactly where the current price is. So you don't think that SoFi in the course of a week would come back to the exact same price that you started with. Now, of course, there's a lot of manipulation happening. I don't know if they're manipulating SoFi like that, but I'm just saying that it would have to be like, it would have to come back to the exact same spot in a week that it is at the time you enter for you to have max loss. Other than that, you're going to have reduced losses on both of these sides. If it's going down between 857 and 906, you're going to have reduced, no less than 43. If it's going between 906 and 943, you're going to have less than $43 of max loss. But once it crosses to either of those sides, then you're in profit. You're in profit. And this is another one I believe you would leave to close, that you wouldn't be fooling up trying to close it on your own. Just put it on and then leave it. Let it play out.
And what's the risk of being assigned?
Well, I don't think you would be, because you actually have bought two puts. You have the one that the 9.5 put that you sold, but in this, honestly, altogether, I don't believe there'd be you need it to be, I guess, below 950. You could, but I don't think there's a risk in here. That's a good question, though. I'm not minimizing the question because I think it's a good one, but I think because you're in this whole thing here, I think you'd probably be all right.
If you sell a call and I buy a put, technically you're making it a credit spread, right?
If you sell a call and buy a put.
I mean, sell a put and buy a put, technically that's a credit spread, so they wouldn't assign you.
Yes, that would be a spread. This is true. So you'd have the coverage of the bought put as your cover. It's true. And then you got an extra one right here. Okay, we're good with that one. Let's move to advanced strategy number 2. Where are we? There we go. Okay, here's one. When stock is bullish, looks a whole lot like the first one, just flipped over. When the stock is bullish, but might go down. It's bullish, but it might go down. Again, 1 to 2 weeks, you're going to buy 2 at the money calls, sell 1 call at a lower strike for more than you paid for the call option. Use SoFi. I use SoFi again, might as well, right? Current price still was 904. I was doing this yesterday when the price was moving around. You're going to buy 2 call options at the $10 strike. The cost was $18 each, or $36 total. And then sell 1 call option at the 9 strike for $50. You're going to collect $14. You're going to make money to enter this trade. Okay. Max loss is $85. Maybe that's the difference between the one spread between 9 and the 10. Maybe that's where the difference is. This max loss piece is there, but your max profit is unlimited. Like on the other one, it was $800 and some dollars. Max profit here is unlimited. Your break even is 915, which is here, and 1085, which is over here. So this is 915 at this point, and this is 1085 at this point, right? Max loss, which is $85, would occur right here at this drop, which I believe is 904. Max loss happens at 904. Okay, anything outside of lower than 915 or higher than 1085 is going to give you profit. The reason you can say the max profit is unlimited, because if the price keeps going up past 1085, you're going to keep on going, and it just keeps going, and wherever it ends up, you're going to be in profit. And that's because you got 2 calls. You got 2 calls up there. Okay. This one has a little bit more of a max loss because of the spread that's between these 2, but your winnings have a greater opportunity. You need to see, though, it needs to be a bullish stop. SoFi has kind of been hovering in a zone. So SoFi may not be the best stock to do this strategy on, right? Because SoFi hadn't been at 1085 in a while. So, but if it goes below 915, which I think it currently is, no, I think it might be at 950 or something right now. But this can't be 904. That can't be 904. Between 915 and that's not accurate. This right here cannot be 904 because that would not be between 915 and 1085. That's some other price there. That can't be 904. Okay, so you need profits below 915 and higher than $10.85. Now, SoFi has been below 915. It hadn't been above 1085 in a minute. This is one maybe like, because SoFi is getting ready to have earnings coming up soon. This may be a good trade to do with them for earnings. So the expectation is that SoFi is going to run for earnings. That's the expectation. But it just in case it doesn't and it falls back off and it below 915, this could be a thing that you benefit from during an earnings play for SoFi. Now, there could be other stocks that this will work on. I just gave an example. One example doesn't mean that you need to use it for SoFi. I'm just saying I just did an example. Preguntas, questions on this strategy? That's 70 cents. This is probably about 950, to be honest. This is about 950. Yeah.
Do we have to look at VIX and DGI direction and that kind
All
of
the stuff you need to do to see if you believe the stock is bullish, because this is a bullish strategy. So this is when you think it's going to go up, but it just might come down. So, look at whatever you would look at to determine direction.
because technically credit spreads are mild bullish or mild
Bearish, this is true.
bearish.
But once you add another call or a put to it, then you're deciding a direction. Once you put this extra call on, you're saying you think it's going up. And if you put the extra put on from the last screen, you're saying you think it's going down.
Right.
Credit spreads by itself, you're right, are a mild direction. But when you put an extra bought onto it, then you're saying I have picked a direction. Or I think maybe it'll be this direction. And if not, you're covering, you say, okay, I think this is going to go up. But if not, I'm covered on the back. That's why it might work decent for earnings. Comments, questions?
What if you use a big stock like Apple?
You could. Very well could. I think what you'd have to do is just look to see what kind of credit you take in or have to pay and what are your, I'm thinking it could happen. This is a three-pronged approach. There's no reason why it has to be on a small stock. It can be on a big one. Yeah. Surely. Let's move on to advanced strategy number 3. This is for when the stock is not moving much at all. This is when the stock is not really moving and it's staying between two windows, right? Again, you're going to choose 1 week expiration, 1 to 2 weeks. You want to sell 2 at the money, sell now 2 at the money calls. And you're going to buy 1 above and buy 1 below. Sell 2 at the money call options, buy 1 above that, 1 below that. It's written over here, but I also have it current price. I used AMC for this example because AMC has stayed inside of a range for a little while. The squeeze and the pop is going to be fine with me, but it hasn't squeezed yet. It's still hanging out in the between 4 and 450. It's been kind of hovering in that zone. Current price 434. This was yesterday. I did this. Sell 2 call options at 4.5, collect $14 each, so $28 total. Buy 1 call option at the 5 strike, buy 1 at the 4 strike, right? So I've spent $41 and I took in $28. The cost is going to cost me $13 to enter this trade. Max profit is the $37. This becomes debit spreads basically, because you're paying to enter, but the way you're structuring it, it becomes like a debit spread. Your max profit, $37. Max profit happens at this pinnacle right there. That's where max profit happens. Max loss is the $13 you paid. This is a 3-time return on your money. You put up 13 to make 37. That's a 3x your money, right? You put in 13 in order to make 37. That's almost a 3x of your money. Your break evens are 413 right here and 487 right here. This is 413 and 487. So somewhere between those two, halfway, which would be what, 60, no, 50, 74. So 37 above here. So this actually would be 450. At $4.50, which I guess would be this sale area, at 450, you would make your max profit. And around that, you'd have some smaller profits. If it got below 413, you'd be in the red. Below 413, you've lost your money. And above 487, you've also lost your $13. Questions? This is for a stock that's not really moving very much. This becomes maybe, I think this may be called a long iron condor because you're paying to enter. I don't know if it's an iron condor though, because it's all calls. So no, it will be maybe a long, I can't even call it a long debit spread because you got two different things working. It may be called something else.
It looks like a tent.
It does look like a tent. Yeah. Okay, this one that was number 3 for when the stock is not moving very much. You believe it's going to stay between two zones. In this case, you think it's going to stay between 413 and 487. This is where you can make your money there. And AMC up until now has done just that. It has stayed between those two places. Whew, thank you. Let's keep pressing.
Arlissa,
Yes, ma'am.
this is for 1 week or 2 weeks out. Is
Yeah.
this how long?
Yep.
Is this a cash account or
This is going to need to be in your margin.
margin account?
Yeah, this will need to be in your margin or in the Robinhood because you're going to need, this is basically spreads. Now, you know what? We've not asked a question of whether debit spreads can be done in the cash account. Because debit spreads means you put money on the line and there's no, well, is there opportunity to be assigned in a debit spread? I would say not, but that might be worth inquiring. Even though you can't do credit spreads in the cash account, can you do debit spreads in the cash account?
Doesn't a debit spread have a sell leg?
It does have a sell leg, yeah, but I'm thinking that the sell leg is, yeah, because I was thinking I was comparing it with covered calls, which has a sell leg, but that sell leg is based on 100 shares backing it. And in cash secure puts, it's a sell leg, but you're backing that with cash. If you're in a spread, you're backing the sale with another option contract. So I think that would be a no. I think that would be a no. All righty. Off to numero cuatro. This is when the stock is moving sideways or going down. Stock is moving sideways or going down. This is another sell strategy. Now, this is a 6-leg strategy. This is where you go need something. Just be mindful of the feeds. This is 6 legs. This to me is getting deeper than I'd want to watch. For me, I'm sure this has a name of some sort. Maybe a broken leg butterfly or something like that. But this is 6 legs going on, and you're using it when the stock is moving sideways or it's going down. Yeah, a 6-leg insect. What's that called? A spider? Dude, what insect has 6 legs? I don't think, not centipede, not millipede. They got hundreds. Anyway, get sidetracked in science. You're going to basically sell 3 at the money call options, buy 2 calls above that, and buy 1 call below that. This is where you got the 6 legs. Sell 3, buy 2, buy 1. Current price, I use American Airlines here. Current price is $18 for American Airlines. You're going to sell 3 calls at 18, buy 2 at 18.5, buy 1 at 17.5. After all that's done, you will collect $16. Max loss is $34 and max profit was $66. You're doing this, it's a sales strategy. Your max loss is the 34. That must come from this 18.5 strike. And your max profit is $66, which is the difference between that and the one spread that you have, the widest spread. Or I guess, I'm not sure actually how these numbers are figured. I just know that 34 and 66 adds up to 100. But this is the graph of what's happening over here. This is one of the ones, I mean, I put it on, but I didn't have a great full, I mean, if I went deep into my understanding, I probably could grab hold to it, but this is not one that I would personally do because it's just got too many moving parts. And when I would come back to it inside of my option, you know, my what do we have like in our trades, monitor, I would be looking at this like, what did I do? I would have to remind myself every time of what I actually did. So, but looks like the break even is at 1833, which would be right here. Break even is at 1833. Max profit looks like it would occur less than 1812, so maybe at 18. If this is 1833, maybe max profit happens at the exact same place you are right now, or really close to that strike at $18. And anything below this 1833, all of this is profit. So if it's below 1833, you're making money. It's just I wouldn't be able to determine how much. How much money along the way. And when would you close it? Would you just leave this to expire worthless? So many pieces. What do y'all think? Stefan said pass.
What do you mean what we think? So many pieces. Shoot. My goodness.
It's a lot of pieces.
Hey, Jamie, imagine me in a car trying to set this up.
Dude, that's crazy.
It's a lot.
Those
who follow Suzanne's group, this probably would be something they do all the time. But I'm like, this right here, though, I'm gonna need to have all kind of understanding as to what makes us do this. Like, I get that it's moving sideways or downward, and we probably could pick something bigger and do it. I don't know, though. And then you need to be at least a week out, so it needs to continue going in that direction. I don't know.
That's a hard no.
It's a hard no. Yeah, hard pass. Hard pass. But I brought it. That's a dead bug. I brought it. Like, I don't know.
but you know what? Foot Locker might work with this one. Remember when Foot Locker just fell off a cliff?
Yes, I do remember.
Going sideways.
shares, I do, but you don't find that out till after to ATF, find out after the fact. Yeah. I don't know. But I brought it to the crew, so you can decide if you want to get a little deeper and deeper, you can go ahead in. This last one is one that we do already, but I still wanted to show the picture of what it is. This is for when a stock is not moving very much. It's a tight iron condor. A very tight iron condor. And honestly, I've done these on AMC for the last couple of weeks because AMC literally is staying in between, it's up to now, it's staying in between a zone. Whether it will continue, I don't know. So, I mean, don't automatically take that to say it's just staying there. It has been staying between the $4 and $5 zone, 4 and 450 for a while. It's gone up above 450, but then it seems to come back down. So in this case, basically, sell one call credit spread, sell one put credit spread. I did them very close. The call credit spread is 4.5, 5.5, right? And the put credit spread is 3.5 and 4. So you need the price to stay between 4.5 and 4. Price needs to be between 4 and 4.5 in order for you to make your money. There is your break evens. Break even here, 371. Break even on the top side is 479. This is 371, 479. Right? I was trying to see these numbers up here where you be at max profit. But somewhere between 371 and 479, probably at $4 and 450. That's what this is. This would be $4 and this would be 450. If you're between $4 and 450, your iron condor is going to pay out completely, which is this $29. Okay. Now this is a 50-cent spread, right? Because each of these is only 50 cents. This is 50-cent spread. So you're collecting $29. Oh, I said 19. You're collecting $29 and your max loss is only $21. The tight iron condor. Between 4 and 450. You need to know though that the stock, and you can widen this. Maybe you do, 350 to 4, and you can do 5 to 550. Something is staying in a bigger range between the two. You can always widen this range for whatever stock you want. But it's basically coming in to as tight as possible. What we know about iron condors, but this is just generally we don't get this close in on a price unless we, have a little bit more confidence that it's going to stay in this zone. This is one you can do though too if you're getting into a trade on like a Wednesday or a Thursday and it's just staying, it's been in the spot and you really believe it's going to stay between these two tight legs. That's something you can do there because you have very short amount of time before it expires. But these, because it's so close to price, because the trade is close to your sell legs, generally it takes the majority of the day of expiration in order to get to max or get to worthless. Because you're right there in between, you're right there at both of the stock. If price is hanging like at 434, like this one's doing, it's hanging at 434. Well, that's close enough to $4 and close enough to 450 that the premiums aren't decreasing fast. The only thing that's reducing the premiums on this trade is time. So theta's decreasing it. It's not the price action that's helping to decrease the premiums. It's only the expiration of time. So you just got to wait and leave it. And what I've done in the past several weeks is just left it and let it expire worthless on its own. Just leave it to expire worthless. Now this one's one we understand. I sure hope this is better than strategy 4. This is strategy 5. We understand this one. It's just a little tighter than we're used to being. And again, none of these have to be done on small stocks. They can be done on bigger stocks. You just need to have an idea of what kind of numbers you're looking at. They don't have to be done on small stocks. I did them on stocks that we're comfortable that we've, traded here recently, but they don't have to be done on the dollar babies. Who's got questions? None?
I'm trying to type up my question.
You're trying to type up your question. Okay.
You know that John Andres guy?
Yeah.
Probability-based trading.
Yeah.
Be like, get it there with high IV rank.
Yep.
Let it deflate.
Yep.
So how would we set up one of these? Is it earnings or high VIX? And I don't know. I'm just thinking dice. You throw the dice. You say, "What are you doing today? You doing straddle? Are you doing iron condor?" Is there a litmus test that we could use to pick which entry?
I think like for this number 1 and number 2, I believe would be ones that could be for earnings. That's what I said when we were looking at these. These 2 types could be for earnings, right? So if we were to look at, let's say we looked at something that was having earnings this week. You could partner that with something that's on the high IV list, which most times things that are getting ready to have earnings are on the high IV list. Those do seem to have a correlation. So you could find one that you like. For example, we like Taiwan Semiconductors, right? You might just look at something or American Airlines, something that you maybe have watched before or traded before, and then say, let's go look at the chart. See what we would do if we check a chart, right? Let's go look at one. I think we can muscle our way through one. What do y'all think? Do we have anything else over here that's earlier in the week that we would be interested in trading? I don't trade a lot of this.
Netflix.
Netflix?
Might as well do them.
I was thinking Netflix too. You got United Airlines right here.
Goldman Sachs.
Goldman.
Oh, man, Netflix or Tesla. I mean, you might as well go with somebody who definitely got a high liquidity and all of that other stuff.
Okay.
They meet all of
Tesla. Tesla.
Tesla. Okay. Tesla's just such a wild bird that I guess that could be a good reason to do it though too, because it's a wild bird. I want to make sure I pull the screen up that shows me the steps. So
I was gonna say, yeah, with that IV percentile stuff, that's the main thing that I was noticing. It's like, well, man, you trying to catch stuff before a binary event, but it doesn't really start kicking up to the higher numbers until it's getting closer to earnings or something like that. So you almost better off getting in the day of to take advantage of the drop, or the day after, however you want to do it. So yeah, that IV number does go up as it starts getting closer to sometimes a month out, actually.
True. Now, the good thing with the 2 things we just talked about, you're taking in a credit at the beginning of that. So I put Netflix on the screen. Let's say we look at just a week away. All right. This is me. I'm just using the guidelines of strategy 1 and 2. I can't show more than one screen at a time. So I can't show what 1 and 2. Let me do this. Maybe I can grab it as a screenshot. And then if you want to look at it on a different one of your screens at the same time.
I thought you could just hold down the control key.
I can. And do what? Hold the control.
When you do screen share, I thought you could just hold down the control key to do two desktops or whatever. No?
You can. Oh, I didn't know.
Oh, I thought it always will say that when I did a share.
Oh, well, let me go see what that says. Okay, new share. None of these say you can do both desktop at the same time.
Yep, like right at at least on mine, right at the bottom. I'll take a picture of it.
Okay,
right
wait, I'm putting on the screen so we can see.
it'll say hold control. At mine, it just says hold control to select 2 desktops.
Okay, if I do control, it doesn't like to viewpoint, computer, audio, content from second camera. No, it doesn't seem to like to. Maybe you got something special on your computer.
Well, that's unlikely, but okay. All right.
But I accidentally set it up. If you show the screen that you want us to have and all of us screenshot it, then we can have it in the corner.
Okay.
But I don't know how to put 2 side by side.
Yes, I'm gonna bring this over here. I got a big enough screen over here. That's my
Oh.
big screen. Thank you for my birthday gift. I got a big screen over here, so I can see all the pieces over here, baby. Let's see, I'm not sure if y'all can see both pieces and parts, but I can see both things. Everybody can see both things over here, I hope.
Yep.
Option chain, and we've got the things, yeah?
Yep.
Okay, cool. There we go. So I'm looking at Netflix, and I'm looking at Netflix for the week. Do we think Netflix will be bearish or bullish? Let's take a look here at our chart. Who's got ideas that Netflix gonna go one way or the other? Netflix they are cracking down on the people who sharing thingies together, because
Yeah, ain't that some bull crap?
every time I go, well, I stopped doing it now, but when I try to go into my daughter's, when I was going into my daughter's, sometimes it would pop up and say, is this the home? Basically, this the home account? And then sometimes it wouldn't. I think it only did it when she wasn't on her Netflix. If she was on her Netflix and I was also trying to open her Netflix, it would pop up and say, is this the home Netflix? This where the home IP address? So my husband said enough of that. He went ahead and used our T-Mobile, because we got it. We get Netflix free with T-Mobile. And he was like, let's just set it up with T-Mobile and quit the foolishness. It was more convenient for me just to push it on the TV versus going through all of the log out, log in. So this is what Netflix did yesterday. All right, it is coming down to a support area at 438. What thoughts do y'all have? Bearish or bullish? This was a big old drop right here. Mine don't say all that, Jamie.
What's above the next, what's the next sell zone?
Okay. I'm looking around here so I can see my screen. I need to move this up so I can function. Boo, 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 do, 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 do.
Dang, for real?
Right. Let me go back long. Let me go grab some more time. 2 years and a day. Okay, so we currently, where are we? Come on here. We're around 460. We go back, forth. Oh, there's a big old gap. Back here in January of last year, looks like. January of 22. There's a gap here that has not filled. As soon as Netflix hit it the other day, it went right back down. Y'all see that, this gap right here?
I have no problem voting for bearish then.
That's the gap. Maybe I had it marked. Maybe that's why I had it marked. From 509 to 458, there's a gap, and it's just below. It's at 441 right now. That's a big gap too. It filled some of it back in January of last year, but that's all it did. This was a seller's gap, right? So there's sellers hiding in there. We're saying bearish. Okay. Now we got to figure out what strikes we like. We're buying two. This one over here is the bearish one at the top. Buying two at the money put options. So go back to trade. We're on the week. We're buying two at the money put options. Okay. Buying two, let's say the 442.50 or 445. I bought them at 9. So let's say I buy them at 440. We're buying two of these. Yeah, like I got sense. There we go. On demand may not work. You know, on demand on the weekend, they're always working on it. And then I'm also streaming, so it may be like, nope, you are trying to do 3 much and 4 much. Come on. Okay, we want to go to July. I'm going to go back to Thursday of last week, just so I can see what's going on. Maybe. All righty, it was at 418 on Thursday. It jumped up and then ran down Friday. So let's go with, what do we say, 2 at the money? So we get 2 of these. No, my computer is moving slower than my clicks. Okay, it's at 449. It was at 449 last Thursday, a couple days ago. I want the 21st as an expiration. At the money, I want 445. Notice these prices. We're going to get 2 of these. It says we're buying 2 at the money put options. $1,700 a piece. So we had $3,400 there. And we're going to, oh, I should have did this all together. And then we're selling 1 put at the higher strike. Selling 1 put at the higher strike. That's 1,900. That's not going to give us a credit. That's not going to give us a credit. Let me go back. Delete. We need to do, what's it called, a custom, so I can pick the stuff I want. I think I'd have to do what's called that, add 1 of these, right? And then do 2, and then I'd have to add an order or duplicate order, I think y'all already say.
This is to do what, a bracket?
No, I'm doing 3 legs.
Okay.
It should create a duplicate order, means it should give me another line, right?
But you're trying to do it as a single order?
Yeah.
If you want to do multiple legs, you're gonna have to switch it. Like, well, let me phrase it. I only know of doing it as a bracket, so I'm not sure how to do it as individual legs.
Okay. I want to do 2 of these. And I want to add another order.
Is there anything you can do with a command, like press the command key and press all the legs and get all of them to create an opening order?
Create duplicate, opposite.
How I normally build my trades is I just select what I want and then hit control and select, select them that way. That's how I usually,
Control.
So no.
On the option chain.
On the option chain.
Okay, so let me go here. So you would pick this here.
Yeah.
And
Yeah.
then Back to the option chain.
Yeah, that little, if you hit this little drop down arrow, that I don't even know why the thing is always popping up. It is so annoying. But go to your left, to your left, to your left, to your left, to your left. Go up a little bit, up a little bit, up a little bit to the right. Boom. Yep. So that is always popping up, getting in the way.
Okay. Yeah.
So, but if you hold control and then you click the next one, then it may or may not pop up. But that's how I hit control and select the legs that I need.
Okay. But the other one went away.
You got to. So that means, well, isn't that the one? Aren't those both the ones you had before? Isn't the one you had before there?
This was, I first had this one here. I had.
So it must still be there.
Oh, it was two things there. So I had.
You had it right.
Two of these, yep. And then if I drop this and add control, I've got control push, and I add a sale, which would be here.
Yep.
Oh, okay. So +2, sale 2. Oh, okay. +2, sale 1. That's what we're doing, right? +2, sale 1. Okay. In this case, it's a debit. That's not what we wanted. We want it to be a credit because you have to sell for higher. You have to sell for higher. Okay, wait, that's where I went wrong. You got to sell for higher. I need to delete this. Now that I understand the mechanics of what to pick, we need to pick 2 of these, which we want 2 of these. I diminish this, and we want, it said a higher strike for more than you paid for the put option. But that only way you're going to get that is to do a lower strike.
Right, but aren't you supposed to do it on the call side? I mean, aren't you supposed to do it on the same side that you?
Thank you. Okay. My brain is, okay, that's good. 17, and I want to sell, but I did sell at a higher. So this is going to be 3,400. So I need to sell way up here so I can get above 3,400. So let's do this one. Let's see what happens. Okay. So this is what happens, I guess, when you do a bigger stock, you can't get as close in price. We bought, sorry. Okay. We bought 2 of the 445 puts, and we're selling 1 of the 475 puts, and we're going to take in a credit of $1. Taking a credit of $1. So Jamie, I'm wondering if we were to pick, well, when you pick analyze, it won't analyze what's already here. It'll analyze whatever you put in here and analyze, right?
Usually, what it ends up doing for me is it ends up showing me a bunch of stuff, and I have to uncheck the things I don't want to see. Okay. Okay, so this, I'm going to do that. 445 of puts and 475 was the. Can I point something out here? Please do. If you look under where we're showing you the credit, yeah. Just keep in mind that with this particular strategy, normally when we see credit, we're used to seeing everything red. Yes, I was going to say it. So this strategy, because I was set up, it's not going to show it to us in red. It's going to, because it's on the debit side. Because we're buying those two. So just be aware of that when doing this one, because it's way too easy to be like, oh, wait a minute, this is, I associate credit with red. So you got to definitely make sure it says credit there, so you'll know that you're on the right track. Right. Okay, so let's look here though, because I pushed confirm and send so we could see what the impact of this trade is on something as big as Netflix. We got our wide range here. The max profit is $41,000. So you could see a lot happen. Depending on how Netflix does it thing, you could, do well. Max loss though is $2,900. Right. So you're putting up $2,900 of collateral for this trade. So maybe this is the motivation for smaller babies. The cost of the trade, you're going to collect $100 right now. Buying power effect, or your collateral required is $2,900, basically $3,000. Which that's the difference between the 445 and the 475 is a 30 spread. That's where that $3,000 is coming from.
So your max loss is the 2,900, but your max profit is 41,600. 41,000. You put up 3 to make 41. I guess that's not really bad. You just gotta have the 2,900 to put in to the trade. Okay, I'm gonna push send. I'm gonna switch this real quick to, I'm gonna add here Robinhood, so we can see what's actually going on. I like, I know I'm not the only visual learner here. So if we do, Netflix is a $400 stock. Potentially, we maybe should do something that is, what's Taiwan Semiconductors? $30.
TSM. Oh, this is that low?
TSM? There we go. There we go. I was looking at what's the price of Taiwan Semiconductors? Come on, Robinhood, fill in, baby. My computer's like, you are asking for too many things, lady. $100 is Taiwan Semiconductors. Yeah, most of us are visual learners. 105, we're looking at that one. Tesla is it's more expensive than Netflix, right? What's the cost of Tesla right now? I don't even know. Amazon might be an opportunity for something like this. Taiwan Semiconductors, Tesla's at 275. So we're looking here, we're on the put side, yes. We're buying 2 puts. I went out a week, buying 2 puts at the money. I'm going 105, buying 2 of these at the 105 puts. We're going to get 2 of them, and then we're going to sell a put that is more, the higher price. We need it to be more than $540. So we got to go up a little bit in order to get to a credit. So I picked the 110 on the Taiwan Semiconductors. I changed this to custom. We wanted to sell 2 puts. No, we were buying 2 puts. Right? We're buying 2 and selling 1. Buying 2, selling 1. We're going to take in $56. This is what the picture looks like. We're taking in $56. I'll make it bigger so everybody can see. Collecting $56. Our max loss is 443 because we're at a 5 spread. Notice the difference between these two is 500. So our max loss is the 443, but our max profit is $10,000. If you're believing that Taiwan Semiconductors, which we didn't look at that chart, so I'm not saying I believe it's bearish or not. I don't know anything about it, but this would be if you thought it was bearish. The break even here is $100.57, and up here, if it goes above 109, so if it's below $100 or above $109, then you're in profit. This part down here is where you really start making these big $10,000s of dollars or whatever, that's down there. Max loss is at 105. Is that this strike for that main one? That's your max loss there. Beyond that, going up or down is where you reduce your loss and then flip into profits for Taiwan Semiconductors. So if you're looking for maybe a 1 spread or a 2 spread, I think it means we need to get down to, we would need to get down into a $30 stock, maybe something that's along those lines. I'm going to grab this in case somebody's interested in checking out Taiwan Semiconductors for next week. But I don't know if I think it's bullish or bearish because I don't, like I said, we didn't look at the chart. If you wanted to do if you thought it was gonna go up, you just switch just the calls and do the opposite stuff, the same stuff on strategy number 2. What did we come up with that we thought might be a, you want to look at American Airlines or United Airlines? You want to look at one of those, something that's smaller? Needs to be small, but have enough pop in it. Who's got a thought? Nobody?
SOXL.
Just out here all by myself, huh?
SOXL.
SOXL?
That have enough pop.
Yep, let's see. Let's look at a chart or SOXL first and see what we, let's see what we see on the chart. SOXL. SOXL is going to probably move along with Taiwan Semiconductors. Taiwan Semiconductors would have earnings this week, and SOXL is an ETF that doesn't have earnings, but it will probably move with something that does have it included.
And be careful because it will move with NVIDIA.
And it will move with NVIDIA. Okay, so let's look at the chart. This is SOXL's daily chart. It is currently looking like it is in a looks like it's in a resistance zone and there's a gap below it. Let me see where the next one is going back. It's above this one here. It is squarely in this zone. This up here goes up as far as $28. It is in the sell zone or in the resistance zone right now, and that zone goes up to $28 based on May of last year. So what do y'all think, bearish or bullish?
I'm gonna say bearish, but NVIDIA is tricky because it's not one that's gonna stay bearish, bullish too long.
Right, that's NVIDIA. NVIDIA dropped yesterday, but you're right, it's not gonna stay there.
You don't, yeah, it doesn't
It's
really.
picking up some steam, dropping some sellers off.
Yeah, don't believe in staying down. NVIDIA is Rocky Balboa, essentially.
Right. So you think for a week you would go with bearish or bullish? I'd say bearish based on the location and what's happening with the chart.
I feel like my spirit is saying bearish, but I feel like the two gaps right there is what makes me go,
Yeah.
But based on the fact that it's in a sell zone, I would say, I would vote for bearish. But definitely this is a perfect situation for you think it's going to go down, but in case it goes up situation.
Right.
This is a perfect example of that.
Right. Yep, you think it's going to go down, but it goes up. This is this one over here, the puts situation. Right, so we buy 2 at the money puts and sell 1 at the money put. Let's go do that. Buy a puts. I went out for 1 week. SOXL, you're going to buy 2 of them. I did the 26 strike, and then you want to sell. That's $91. We need something more than $91 or $180. So we need to go up maybe to the 28. That's only 200 spread. This may be good. We bought 2. We need to buy 2 of these. Okay. There we go. Fix it, baby. I'm looking for my chart to change. You see the picture here. There's a max loss of 162. Because that's the spread here between 28 and 26 is a 2 spread. So that's $200 of collaterals on the line. You're taking in $30, $37. That's why the max loss is 162, right? 162 from that. Your max profit is 24.38. You're gonna make money if it's below 24.38 or if it's above 27.62. Notice on the upside here, though you're in the green, your green is maxed out. You can't go any higher than this amount of money, right? So whatever this money is, whatever that max is for the 28, that's all the money you're gonna make there. Looks like, I was gonna say, it looks like it's $28, but I don't think that's the way that goes. This 28 is the price of the stock. I don't know how your profit is figured over here. So if the price is above 27.62, you're in the money. And if it's below 24.38, you're in the money. So all this, if it's between 24.38 and 27.62, then you're not making any money. So that's a $3 spread. Between these two is about $3. If it's in between those two spots, you're losing, you're in the loss category. But if it's outside of that window, then you're in good money.
So somebody like Tesla probably would be good for this because the chance of them staying in such a narrow range when they price be straight up wild ass on the loose type stuff, volatility, you know what I'm saying? They might be somebody to consider as well.
Could be, but the only thing that we saw with the $400 stock was you needed to put up $2,900 of collateral. So if you do it with something like a Tesla, then you're looking at what kind of collateral you're going to have to put up for a $275 stock.
Right. Well, I just mean in terms of concept.
Yes. In terms of concept, yeah, I think you kind of want, would be the best of all the worlds. You kind of want a stock that's $100 or less, but has enough volatility that swings where it swings enough outside of these ranges. So you want something that's why I feel like you want something that is small enough to make to keep you with a 2 spread or a 3 spread, but that's volatile enough to get to swing outside of a small range.
We might need to swing by FinViz before we leave.
And what are we gonna look for when we get there?
Well, what you just said, if you're saying stocks that's $100 or under,
Yeah.
then we got to figure out, what the volatility would be for that.
You want like a high volatility, less than $100. Let me see if I can go here. If I turn off on demand, I may be able to see, because we can really use our high IV number. Yeah. Why can't we use that?
Does that show up on FinViz?
I don't know.
It's in that PBT watch list. And
Yeah.
Beyond Meat is in there. $17. High volatility.
What is?
Beyond Meat.
Oh yeah, Beyond. Top of the thing. I'm looking right here. Can y'all see this screen? Beyond Meat has an implied volatility of 78, and it's at $17.
I'm Palantir.
Yeah, Palantir is the next one. Rivian is up there. You've got some that are potential could be good. Meta is in here. Meta may be a good one. But it's a $300 stock. So you want something smaller in price. Upstart, I haven't traded them. Google's at 125.
Intel is only $33.
I don't even see. Oh, there it is. $33 down here, and it's 47 in implied volatility. Those could be some opportunities. Intel, SoFi doesn't move enough for it to really work, in my opinion, for this. Or maybe during earnings. SoFi for earnings, I think this may be a move. Intel, Roblox, maybe Snap. Some of these I don't really watch. Upstart,
Roku?
Don, Roku will make you throw your TV right at it. I don't see Roku on the list unless it's down some more.
I think I modified the list.
Okay, you got Riot. I did too. I see it. It's on 32. Riot is here. Do I see Mara? Because Mara is, I don't see Mara. Mara had been hanging out in the higher implied volatility. It's only at 20. It's relaxed a bit. Let's look at Beyond Meat. Let's look there. Beyond Meat. Do we think Beyond Meat is, I think it's more bullish right now. Rivian, those are two that I think are bullish. They've both been going up. Where's my Carvana? Because that will probably be another one. Carvana's at 34. Those three could work. Beyond, Rivian, Carvana. Let's go. BYND. Beyond Meats. Look at the chart. Been going up for a good little minute. It had some down days the last couple days. I think the support is down in here, 15. I'm gonna look at, who else did I say, Rivian? That chart look almost the same as the other one. I'll see that. This chart looks very similar to the Beyond Meat chart. The support is, it's right at support at 24. I would say bullish there. And then if I looked at Carvana, also bullish. Let's look at those. I like Rivian. Has anybody seen those Rivian trucks on the road?
I did. And I heard
did.
Amazon put a big order for Rivian.
Did they?
Use them as delivery trucks.
Ah, that may be why they've had a little bit of a run. Because they've had a run in their stock price. They maybe did that with Amazon's order.
But you know what looks like a Rivian now? The new
What?
Bronco. The new Bronco, the front looks similar.
Yeah, I agree. I agree with that. This is we think this is bullish, so we can do the other side. We just did the bearish ones on those last two for SOXL and such. Now let's look at Rivian for a bullish move. It means we're gonna buy 2 at the money calls and we're gonna sell a call lower than that. So we're gonna buy 2 at the money calls. I just went out a week again, buying 2 at the money calls, 25. I picked that strike. And we're gonna sell a call. We need something more than $200. So 220 is right here. This is a 2 strike. Well, I went to the 23. Let me fix how many of these we got. So we're buying 2 of the 25 and selling 1. We're gonna collect, our total credit is $10. But we see here our max loss, and what we can do, though, if you want to widen this more, I believe you can change this. Let me see if I change this. Let me see what happens if I take this off and put it here. That changes the chart. Nope. Makes it worse. That ain't what we want. Oh, what are you doing? Okay, I don't want this one. Doing all kinds of stuff. Did it have 2? Custom, 2, and 1, like I just had. Now, why did this change up? Okay, I don't like what it did. So let's clear. Let's go back. And start again. There used to be a clear button up here where you could just clear what you had. And it may still be there. It's just, I didn't see it. Okay, so we're buying a call. I had it at 25. You probably could buy them up here a little bit cheaper. That way you don't have to get The sold calls don't have to go up as high. We need something over 170. Still a 2 spread. Let's change our ratios. Okay, I was trying to make this side back here be a little bigger. I was wondering if I sold at a higher strike, if that would change things a bit, or sold at a lower strike. Let me see if I undo this, but add this one. That changed the chart. I want to make sure we still got the proper 2 and 1. See how it changed that chart though? Jumping from one strike to the other made this strike means you have to, everything have to be, but we're trying to go for bullish, and this now makes it look bearish. So I'm undoing this one. I know what I may have to do. Again, it threw off. I may have to get to the 25, literally be at the money on the call side. May have to do this one at the money. Don't leave any room there. And then sell. You need something above 2, so maybe go to 220. And then change the, again, I like Robinhood just to see if you can go to Robinhood to see it and then go into Thinkorswim to input the strategy, to input the trade. It still has a small right here. I kind of wanted this thing over here to be, this side down here to be bigger. But it shows here, your break even is $23 down here. Break even on the top is $26.89, so about $3, $3.50, $3.70, something like that. Everything above $26.89 is unlimited profit. Going down here, maybe down here, because it's flat, maybe this is where you just keep your $10 and you don't lose, any of their 189. This part down here is where you just keep the credit that you got. But if it goes higher, this is where you can start to make unlimited money. Yes, that is what's going on here. On this side, you don't make any more money. You just keep the $10 that you got. If it goes up over here, this is where you start to make this unlimited money, where it goes up and up and up. That's how that goes. I'll take a picture in case somebody wants to go check it out. ATF, after the fact of our call, you might decide to go back and do some studying. I'm wrapping us up. I know we've been here for 2 hours. Last one, I'm going to do Carvana, just so we can see what's going on. What's going on? What's going on? Just going to see what's going on. Is it raining? Nope, it's not raining outside. Who's got questions while I'm just tinkering and doing? Anybody? Y'all done tuned out? You tuned out, Arlissa? You doing too much? Been here too long? Buying a call on Carvana. Carvana's a $30-something stock, $38. Buying at the money. They're a little more expensive too, at 38. And then we're going to sell a call. We need more than $600. Ooh, we got to go way down here. 620 wouldn't be enough. 650. How much of a spread is that? 5 spread? Custom. Oh, it's a 6 spread. We need 2 of these. Yep, so here you're gonna keep your $27, but you got a max loss of 572. That is not worth it. That if the price does fall down below the $32, you got to have a strong conviction for the upwards if you're gonna do this on Carvana. Because your max loss is the 572, your max profit is unlimited, but you need it to be above $43. Needs to be above $43 for this to work. And the current price of Carvana is $37. So it needs to move $6 within this week in order to get you there. I'm going to go back one step and see if I can adjust this one thing and see if it makes a difference. We're buying a call for this week. Now, another option you could do is maybe go out 2 weeks. You know, you could go out a little bit further. Maybe you do down here in the 250. This is not really at the money. And then you sell, you just need to get above 5 and some change. Still puts you on a big spread. It's still a 6 spread there. Again, you need to have a strong conviction on it if you're gonna, in my opinion, you need to have a strong conviction that Carvana is gonna keep going up, because down here, if it goes below 33.87, you're only gonna keep the $36 you put in, but you're getting 36, but you're leveraging 600. Okay, so that's similar to what we do for SPX. We do that for SPX for a day, not for a week. This is a week's worth of your $600 being leveraged. Now, if you believe Carvana is going to go up above $45 within, which is $8 move, it's going to go up again up above $45, then all this is profit. That's why I think these would be good on earnings time, because you need a pop. You're going to need the volatility of going one way or the other. You're going to need it to move hard, I think, in a direction that you think it's going to go in. You are protecting yourself on the opposite side, but you got a conviction that it's going to go up in this case, that it's bullish. I think this would be better used if you're looking at earnings. These two here, I believe, would be best utilized in earnings opportunities. Okay, anybody got any questions before I wrap us up? We have covered some great information today. Y'all agree with that?
Yep.
Agreed.
Hey, is there a Greek that's related to all this stuff called gamma?
It could be. I don't know what gamma stands. I don't know how to explain gamma, but
Me either, but
bring up it open.
yeah, I think it has to do with where volume moves around, right?
I don't.
I have to investigate. That.
Okay, so here's our wrap up. We have 15 plus. I probably didn't cover all of our strategies, but we have at least 15 strategies to choose from as option sellers in the E2T community. There should be no concern that there's not something available that fits your life and fits your circumstance, right? And you can shift in and out. You add these, you mix and match. You work with what works for you. If you're one, you got enough time for this, then just do that. If you want to try some other things and see if those work for you, then do that. If you're ready to add some advances, then do that, right? But do what works and fits your life and your circumstance. If you honed in on SPX or XSP, and you can rinse and repeat that, maybe add some cash secure puts and cover calls because they don't require any watching, then do that. All righty. I see Jamie put a most volatile stock screener up on the board with FinViz. I knew you got quiet for a reason. You went off to FinViz to start pushing buttons. We probably have too many strategies. Definitely don't have too few. We probably have too many. So we want to, for those of us who, have attention deficit issues, we need to try to stay as focused as possible. Don't overwhelm yourself. Pick a tool that fits the market situation and get that money, right? If you know price is going, if you feel like price is going down, right? We don't really buy puts. You can do call credit spreads. You can do XSP, SPX with that. You can do covered calls with that. You can do a couple of these advanced strategies. If you think price is going up, you got put credit spreads, SPX, XSP. You've got selling a put against it, right? Buying shares. You can do these advanced strategies of definitely in earnings times. We got choices. Again, I'm probably almost too many choices, but we've got lots of opportunities. Okay. Who's got comments? Anybody got something they want to add or share to what we've done today? Ooh, a lot. A lot. No comments, no concerns. Ooh, baby, thank you, Jesus. We thank you, baby Jesus and grown man Jesus, because you've been grateful. You've been great for us, and we are grateful. You've been wonderful, and we are grateful. Let's go with that. Okay, y'all, I'm gonna load this up, and then I'll put it into our chat. I put the link in our chat. I got a few things I need to pull up. I need to get us some cash secure puts for the week and some covered calls for the week. I'm gonna try to do the upcoming week in the market video. I don't know if I'm gonna get all that done because I think Mr. P is waiting to go somewhere. So he's chomping at the bit for me to get off the computer. All right.
Thanks, Arlissa.
It's when we study, and then we make money on Mondays and Tuesdays and Wednesdays and Thursdays and Fridays.
Thanks, Arlissa.
Absolutely. I'll see y'all later. You're very welcome. See us in the chat. All righty. We'll talk soon. Bye.